Delta Airlines just out with earnings. Company reporting profit of $2.32 a share, beating the consensus estimate of $2.26. Joining us now to talk about the quarter, Ed Bastian, CEO of Delta Airlines. Great to have you on today, Mr. Bastian. Pretty solid quarter. Your stock has been doing better. I think you're the second best performer in terms of airlines. You don't fly the MAX, but interesting that overtime pay among your pilots could be a part of adding to some of your costs, which people have been following kind of closely. You've had to make up for a lot of the canceled flights. That's a good problem to have, I think.
It is a good problem to have. Thanks, Joe. We had a great quarter in our third quarter. Demand for our product has never been stronger, and clearly not having the MAX helped us on the margin. I don't think it was a main driver of our results. Our revenues were up close to 7%. In the quarter, we were able to flow that through to bottom line, expand our margins by 200 basis points. EPS was up 30%, and the result was a $2 billion profit. And yes, we did have some cost pressures given the large volumes that we've been carrying. We addressed it in a call with the analyst a couple weeks ago, and we're going to be increasing some of our cost forecasts going forward. But that said, fourth quarter, we're looking to grow our EPS meaningfully as well.
That's probably what people are looking at in terms of the stock. I mean, it's not a huge move, up 1.5%, and who knows by the end of the day. But is that something that people would have noticed, that you warned about costs maybe going up a couple of weeks ago, and then that's reflected in the report? Is that what you would attribute to you beat earnings? Why do you think the stock's down? Because of the guiding costs a little bit higher?
Well, I think some of the cost growth is the investors are catching up with the news. We'll be addressing that on our call. In the fourth quarter, we had some accounting matters that it's about half of that cost growth above our baseline cost that we'll be addressing. And then there's another 1.5. We had some wage increases for all of our ground staff and our flight attendants, a 4% increase that went into effect October the 1st, and just continuing to reinvest in our business. We've grown this business, our top line, by 15% over the last 2 years. It's really hard to keep our unit costs down in the 1% to 2% range when you're growing your volumes at that level. So long term, our outlook is great. Our cost outlook long term is to stay within 2%, and we're still within that range.
Hey, Ed, if part of this is because of overtime, where you're picking up additional flights because your rivals who use the 737 MAX can't do some of those flights, do you think that these are going to be long-term market share gains that you hold on to? And if that's the case, do you expect to hire more pilots instead of paying them overtime?
Yeah, we are hiring pilots, we're hiring flight attendants, we're hiring ground staff, we're hiring in all categories of the company. We're in the process of hiring 6,000 people this year and at least a like amount next year. I do expect the share gains to be held. Our Net Promoter Score, which is our key measure of customer satisfaction, is also at an all-time high. It was up 5 points year to date. So I think long term, our growth story is intact. We're going to have some costs to invest to keep the product and the service strong and keep the satisfaction growing.
Capacity is something that it's hard to, there's good times, and then sometimes it seems like it gets too good. Where is it in balance right now, Ed?
I think it's in balance, Joe. I think one of the things that's weighing on the airline stocks as a whole is the question about how the MAX returns next year, right, and what will be the sequencing of that. And I think that will be the capacity story that most investors will try to look out for. Given that we don't have it, it's not as much an issue at Delta, but to the extent there is incremental supply above demand, that will certainly put a pressure on pricing.
Ed, can you speak to that specifically? I know it's not a plane that you fly, but obviously investors are asking you questions about it. They're thinking about it in terms of the multiples and comps that they're putting on you relative to everybody else, and where this whole thing shakes out in terms of the timing on that plane, and these new reports that suggest that there's at least some kind of skirmish taking place between European regulators and the FAA and others.
Well, we don't fly the plane, Andrew, so I'm probably limited in what I can say. But I've said all along, I think it's going to take longer to get that plane back in the sky than anyone had thought, given some of the sensitivities, particularly some of those political skirmishes that you're talking about with the regulators. We expect to see that plane in the first part of next year. We look forward to competing against the plane. One thing about the MAX is all the other airlines that had it, I think, have done a very good job of holding on to their key profit pools and their key revenue pools. So to the extent that they did not have that incremental lift, it was obviously in some of the weakest markets they flew. So competitively, our outlook looks strong, and any share gains that we picked up in the year, I'm sure we're going to continue to fight hard to hold.
Did international, is that a positive or a negative? Is it slow internationally, Ed?
Well, international is choppy. I mean, on the U.S. side, which is our bread and butter, about 2/3 of what we fly is domestic. We were up 8% in the quarter. Internationally, there's been pockets of weakness, particularly in Asia. Certainly the tariff issues on some of our automotive and heavy manufacturing customers have cut back their travel to Asia. Europe was a bit weaker, given primarily currency effects, so it was much more expensive to fly out of Europe. So as a result, the U.S. inbound traffic into Europe was strong, but exit Europe was a bit weak. But that said, we also have seen a lot of capacity come out of the European transatlantic low-cost markets. In fact, this winter, we expect that marketplace, the low-cost European transatlantic, to be down almost 20% in terms of many of the bankruptcies we've seen in the last number of months.
Hey, Ed, and to that point, how many flights a day do you fly directly, either branded as Delta or co-branded with partners, to China right now?
China is about 3% of our total revenues, so it really is relatively small. And we're at a max in terms of the level of flights that we're allowed, either U.S. carriers going into China or the Chinese carriers coming out of the major markets into the U.S. So I think the capacity is largely fixed at this point until there's a new set of bilateral discussions between the U.S. and Chinese authorities, but it's relatively small for Delta.
All right, Ed Bastian, we appreciate you coming here and talking over the results. And as we said, I think Delta, most carriers down for the year, but Delta stock up off a little bit today.